Well, U.S. President Donald Trump says he's moving forward with tariffs on Canada and Mexico. As you can expect, those tariffs are expected to be a source of significant uncertainty, especially for parts of the country that rely heavily on trade with the U.S. We're joined now by Laura Gu, a senior economist at Desjardins. She and her colleagues have recently studied and published on this very topic. Thank you for coming in.
Thanks for having me.
So your economists, as we know, have base case scenarios and other scenarios that are outside the base. Your base is for tariffs of about 10% to be imposed on Canada and to endure for how long? Is that built into your base case?
Yeah, it is. So essentially, the provinces are going to head into a budget season with the level of uncertainty unseen since the pandemic, and that is, of course, due to the impending U.S. tariffs, which affects every Canadian. But according to our analysis, some provinces are going to feel it more acutely than others, and that is because the differences in what they export and the sectoral composition of these different provinces. Mm-hmm. So that means even though most provinces started the year quite strong, some of them will see sharper slowdowns later in the year. So the question becomes, so what would be the magnitude of these slowdowns for different provinces? And given the lack of clarity of tariff implementations at this point, mm-hmm.
We
are assuming a partial imposition of 10% tariffs on all goods except for energy, and the higher rates for some strategic metals such as steel and aluminum. And under this scenario, we're forecasting that central Canadian provinces, Ontario and Quebec namely, will slide into even weaker growth this year than last, while the others have a chance of experiencing a slight rebound this year in terms of growth.
Let's focus on Ontario, and we'll talk about some of the other provinces as well. Ontario is the home largely of the auto and auto parts sectors. That has a lot of people worried. What are some of the consequences in Ontario? I know you've scoped out job losses and economic consequences.
Yeah, absolutely. I'm glad you asked about the regional differences Ontario to start with, because it's really important to keep in mind these sectoral differences when the provinces plan for the future. And the manufacturing sector is going to be the most vulnerable as it exports the most of its outputs to the U.S. And this particularly affects Ontario and Quebec. And like you mentioned, in Ontario, risks are concentrated in the auto industry, and to a lesser extent, machinery and electronic manufacturing as well. Mm-hmm. And this, that Ontario as a province really exported a wide, range of manufactured goods to the U.S. And so under our baseline scenario, we can expect to see a 1 percentage point job loss in Ontario. But this, there's a lot of downside risks to this forecast, just given, just a very sizable proportion of jobs in Ontario especially are directly linked to exports to the U.S. And
I see that a 1% job loss in Ontario would equate to as many as 100,000 jobs. But I think, if I understand correctly, you also model out that if 25% blanket tariffs were imposed, as many as 250,000 jobs in Ontario could be lost, correct?
Yes, that's correct. And that is the direct job loss, meaning the industries that are directly associated with trades with the U.S. and their upstream industries. And it's worth noting that some other industries that aren't directly exposed could eventually suffer as well if the tariffs have caused more of a broader economic slowdown without proper government intervention. It's likely, through the ripple effect, we're going to see unemployment rate rise around or above 8% nationwide and 10% for Ontario.
Okay, why don't we talk about the energy exporting provinces? They are somewhat cushioned by the fact that they export energy.
Yeah, absolutely. We believe that crude oil is highly likely to be exempt from the U.S. tariffs, because imposing these tariffs would go against the U.S. administration's ambition for energy dominance to boost oil production and lowering energy prices. And this carve-out is quite important for Canada, we call it the, I guess, only silver lining in this whole trade talk, since 30% of Canadian exports to the U.S. are energy products, and this really helps, put a layer of protection for provinces such as Alberta, Saskatchewan, Newfoundland, and Labrador, and because outside of oil and gas industries, these provinces, the exposure to the U.S. demand is actually quite low. So according to our analysis, these provinces will likely see around less than half of the economic impact that Central Canadian provinces will face.
Okay, what are the fiscal implications here? If there are significant job losses and significant a contraction of business activity, that has consequences for provincial finances.
Yeah, absolutely. So we are expecting a few key themes in the upcoming, ongoing budget season. So the first and foremost would be some revenue downside. So we're likely to see reduced revenue projections. That is because the macro backdrop has weakened compared to what the provinces have anticipated last year, and the renewed uncertainty could really lead to continued deterioration in provinces' bottom lines. And if tariffs were to be implemented, all provinces will experience reduced revenue projections at varying degrees. And this is especially for provinces such as Ontario, Quebec, Manitoba, and PEI. And it's worth noting that it's not just a problem for the non-energy provinces. Oil exporters, even though we're assuming a carve out for energy products from the U.S. tariffs, the oil-producing provinces will still likely to see lower than anticipated natural resource revenues, and that is because lots of downward pressure on energy prices given an oversupply global market, as well as the U.S. administration's agenda for energy dominance. So it's very likely that, and given how sensitive these provinces are, especially Alberta, to natural resource revenues, it's likely that we're going to see minimal or even negative revenue growth for these provinces in the upcoming fiscal year.
Okay, why don't we finish with the two provinces who you believe, through your research, are least impacted? That's BC and Nova Scotia.
Yeah, that is right. So BC and Nova Scotia should be the least impacted due to their lower trading volumes with the U.S. And in BC's case, there's also a higher proportion of services exported compared to goods, which aren't yet subjected to tariffs. And this lower exposure really helps mitigate the economic impact for these provinces. And according to our analysis, these provinces could expect half of the economic shock compared to Ontario and Quebec.
Okay, thank you so much for coming in.